The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here as we broadcast live at the 2023 Commodity Classic in Orlando, Florida. He joins us from his office in the great state of Kansas to dissect the March WASDE report and more. We welcome in our good friend Mike Zuzolo with Global Commodity Analytics to Market Talk today. Mike, always great to catch up with you, and man, no shortage of things to talk about today, I suppose. What do you think, buddy? Oh man.
I think we're both getting more wanting of shortage of things to talk about. I think producers are that way as well. I spent the day with a lot of producers yesterday at a University of Illinois, what we call the Beef House Conference that's put on by University of Illinois Extension and Farm Doc, and about 350 people there. And the word of the day essentially was, give me a break. When can I just get back to the simple days of supply and demand? And I think that was, like you say, Jesse, the hallmark of Wednesday's price action. We barely got the numbers out, and then there was a brand new hit on the news wires that the United Nations and Russia were going to meet next week in Geneva over this grain deal, over the Black Sea Grain Initiative, trying to get that extended. The Ukrainians and the UN want it. Russia says no way so far. And so as soon as that came across, it seemed as though the numbers meant very little. And all of a sudden we saw the wheat make new lows and take out some of the recent lows in soft red wheat. Hard red held on. But I think it just illustrates what you're getting at. It's really about the sentiment and the momentum in these markets. And a lot of that goes back to the outside markets and the risk-off mindset. The Federal Reserve Chairman telling Congress that he could not only quicken the pace, but increase the amount of interest rate hikes again if he doesn't get what he wants. And this is just creating continued mindset and sentiment in the commodities of a risk-off mindset and just keeping money on the sidelines. And in that respect, the supply-demand fundamentals are very hard to work through and explain to clients and subscribers.
Well, we'll do our best to look at some of those supply and demand fundamentals, and I love how you set all that up because I couldn't agree more with you. But let's talk the WASDE numbers. We have them. We should discuss them. I'll pull up the chart on the video feed as well for folks to look at if you're watching on YouTube. Key changes, the Argentine numbers, we knew they were going to change. They came in a little bit deeper, I think, than expected. Some of the corn numbers with exports and ending stocks a little bit different than expected. Overall, can you walk through some of the key changes we saw on the March report, Mike?
Yeah, I think the biggest change was on the demand side. We did lose, 75 million bushels of exports in U.S. corn. We gained 25 million bushels in soybeans, which really surprised me, given the fact that we are still down versus the year in the year-to-date export inspections, Jesse. But USDA sees a better look to this market in terms of soybean exports. And so I would say the U.S. numbers, other than the wheat number coming in unchanged, the U.S. number probably favored the soybeans, and I think the trade took that pretty much at face value. I think as far as the world numbers go, what the trade did not take at face value, they did initially, but then as I said, the Black Sea Grain Initiative issue got in the way. Was, if you notice, one of those two green lines on the world numbers, world wheat ending stocks of 267.2 million tons, below the lowest trade guess by quite a bit. And I think that was a real wake-up call to all the spreaders out there who had been buying corn and selling wheat. And I think on a percentage basis, that's probably why the corn lost the most, along with those U.S. numbers and that loss of export demand.
Overall, to me, it felt like, as we've alluded to here already, that the trade took it and then just moved on here. So I wonder if maybe our attention is going to already have to turn to the end of the month report here with acreage and whatnot, Mike.
Yeah, the interesting you bring that up, because what I saw in the report and the market reaction was the USDA cut, and you mentioned this a minute ago, 15% on Argentine corn production, 20% on Argentine soybean production. And so now we're at a situation where the Argentine soybean production, and if you add that into the Brazilian production, Argentina is now only a little over 21% of both countries' production number. So every percentage cut in beans means less, because in terms of corn production, Argentina is now at 32% of both Brazil and Argentine corn production. And so that big cut in corn production not even registered with the trade hardly at all today. And I think that really goes back to the fact that the trade is focused on soybeans and the demand in the meal market especially. But I think even more importantly is the beans have probably hit again that ceiling that they are going to have difficulty going higher without the corn and the wheat turning their trends back up, at least putting in a market low. And I think this chart right here with the Argentine soybean production numbers, if I kind of dig into this a little bit, I look at the green line especially, that's going to be your exports coming out of Argentina. Notice that our production is even lower than 2017, 2018. I want to say we're now at a 14-year low in Argentine soybean production. And I think that helped keep the bull fed a little bit. But those export numbers, USDA still got about a 3 million export number for Argentina on soybeans, Jesse. I really don't think it'll even be that. And I think Argentina is going to have to be a net importer when it's all said and done. But here again, I'll just stress again that the trade could not really deal with that, couldn't trade the bullish crush number. Why? Because the corn and the wheat were going deep in the red. And I think that's the key going into the end of the month report. And whether, as we know, USDA uses the bean corn ratio in the March 31st report frequently when they assess what the acreage base is going to be. Your November beans divided by December corn right now are at 2.45, 2.44. That's going to be the highest since October of 2021. So you're not buying bean acres or buying corn acres right now. You're really securing more bean acres. And I think that's really disappointing, especially to the group of people that I talked to, the farmers I talked to in the Central Corn Belt yesterday.
Well, I know as well you shared another chart with me, the world stocks to use ratios. I'll just pull this up, let you hit some high points here as well, real quick, just to kind of continue on this discussion. I just think there's a lot of different data points that are really starting to come together here, Mike, when we look at this market trade overall.
Yeah, and I think this chart I designed for you and your show today just because I wanted to show the trade how I feel in terms of actual hard numbers and raw data, that we're really not trading supply-demand fundamentals from the report at this point, because the middle column is the key column to look at. That's what we just received today from a world stocks to use level from USDA, and wheat came in at 33.7. It's below both last month and it's well below last year. And the same with the corn. We're trading right at last month's level as well as last year's level. And then you look at the soybeans. The soybeans, as I said a minute ago, probably did get the bull fed a little bit by going down below 27% stocks to use ratio, as it was 27.1 last month. That 100 million metric ton ending stocks number, I think, was very needed to keep the support in this market, because now we can start talking about sub 100 million metric ton ending stocks. But you see these numbers, that it should have been a situation, in my book anyway, Jesse, where the wheat let us out of the hole, because the trade was not expecting a decline in ending stocks to the tune that we got today. And we've pressured this market a couple dollars at this point. So where was that short covering coming in off of a bullish report?
Well, we are having a conversation today with Mike Zuzolo of Global Commodity Analytics joining us here as we are broadcasting from the Commodity Classic in Orlando, Florida. And Mike, I want to pivot a little bit to Fed Chair Jerome Powell, just the comments we've got from him this week and how this is factoring in, because I know you mentioned it a couple times, how it just doesn't feel like this market's trading supply-demand fundamentals. We're getting these comments from the Fed chair in front of the Senate Banking Committee, the House Committee on Wednesday. What are your thoughts with what you are hearing from him and how this plays into everything we're talking about right now?
I feel like what I've seen and heard so far is that the Fed is trying to control a tornado right now, and that they're trying to put a rope around a tornado. And it's almost getting to the point where I think their mindset and how they convey their message is not forward guidance, it's exasperation. And I think that does nothing but create more opportunities for rallies in the stock market, rallies in the commodity markets to be sold off. And if you dovetail that, Jesse, with the daily worsening of conditions between the United States and China and the rhetoric that we're hearing from both parties right now, the foreign minister, for instance, a couple nights ago, having their big Communist Party update and talking about if the United States keeps going down this path in Ukraine, there will be a war, there will be a conflict. These are the things of the trade they're not going to deal with, and they're going to jump out. They're going to preserve equity, and they're not going to tolerate margin calls because they're not going to really have conviction in their bias. And that's really goes back to what we've talked about so far, is that even if you believe the supply demand fundamentals, even if USDA has wheat average cash price for this current crop $2 above where it's being traded in terms of the cash market in Illinois and Indiana, it's $8.50 for a USDA average cash price. We're so far away from that, we can't even know if it's really real. And it goes back to these outside market fundamentals, and the Fed's not helping the situation. And I think they'll continue to be a situation where, as I said, the trade will continue to sell rallies as long as we keep this kind of rhetoric up by the Federal Reserve.
What is the mindset of the average farmer rancher? You just mentioned you were at an event here yesterday in the Heartland, and they hear about all of this stuff with inflation. They're seeing the price of their inputs continue to rise. We're looking at all these different factors in the trade and just the volatility we've seen. What is the general mindset that you are hearing from farmers and ranchers in the Heartland, Mike?
Yeah, this is a really critical situation because they know their profitability is not going to be as good as last year, even with lower fertilizer prices, because of all these other input and especially cash rent prices that have just skyrocketed. And I was shocked by the University of Illinois budgets that they showed. These were as of about a month ago, but it takes about $5.25 to break even on good ground in central Illinois if you include $350 roughly rent payment, whereas it's 12 and a quarter on soybeans. And so I'm sitting here thinking to myself, what I heard yesterday from producers, if they've got an 80 or a 160 that they're not sure where it's going to go, it's getting to be more and more of a no-brainer to go ahead and do it into beans, because you're right at break even right now on new crop corn sales. If you would make a corn sale in central Illinois, you probably couldn't get much more than 5 and a quarter, whereas you could get $1 better than that, and even more in some areas of Indiana and Illinois if you're near a processor.
Well, great things to consider. And I think just overall, to dovetail our grain discussion before we move to livestock, is it comes back to risk management. It comes back to sharpening that pencil. It comes back to managing your operation and what works for you, and using the available tools, the available analysis at your fingertips to try and make an informed decision, Mike.
It is. And I'll tell you this, Jesse, and this is really information I usually share with clients and subscribers only, but I talked to about a half a dozen clients and subscribers that I had at that meeting. And I said to them, with the way this market's stacking up, with the wheat not finding a low, with the fact that the beans are continuing to keep this kind of a premium, all these things you and I've talked about today, and then you throw on top of that the U.S.-China relations, something's going to have to give in the bean market if the wheat and the corn don't bottom. And I said to him, don't be surprised if you get a text message blast that says sell 100% of your 23 beans in a variety of ways. some with cash, some with paper positions, because I'm really starting to get to that point. Just because we can't seem to trade those supply demand fundamentals. It seems like something very big is in the works right now. I don't want to get it caught with a 50 or 60 cent lower November bean price, go through the $13 level, and then freeze up everybody, kind of like what's happened in the corn market. We can't tolerate both row crops going lower right now, because think of it this way. What would happen if we saw that kind of a price action right when we were getting into the tractor cab to put new crop seed in the ground? How would we feel after seeing the record high prices in some cases last year and then having to go through that this year? I'm just not going to tolerate that in terms of the psychology of this market for my clients.
Great stuff. Let's talk livestock. Let's move over there. Really a pretty solid day Wednesday in the livestock trade, especially the feeder cattle market. I know taking a cue from lower corn. Well, I'm sure we'll talk about that in a second. I'll pull up on the video feed the April live cattle chart. Walk us through what you're seeing here and just some general update on this cattle market trade right now, Mike.
Yeah, great way to frame it, because I am giving an update here. We talked about getting some April puts bought, and that was a couple 3 weeks ago. And those puts I got around $1.40, $1.50. Those puts closed today at about $1. And so what we're looking at is a slight erosion in those puts, but they're really hanging in there nicely, because what we see over the last couple 3 weeks is that 165, 166 level is really tough to get above. And that goes right back to the cash market and the fact that the Packers are really not wanting to press this side of 166 plus. It's not because they aren't making money at that level. I continue to wonder whether they're current enough or whether they're substituting and compensating for more hogs and slaughtering more pigs just so that they don't have to pay any more than a 165. I think that's going to continue. We'll see how they act if this blizzard comes through in the plain states. But I guess to wrap it all up is that the fat cattle have almost started to go more of a sideways mindset. It's been more about the feeder cattle and them playing catch up with the fats. I like those puts, especially since they've come down at about $1. And I believe those are the 164s for the April. I just think they're great risk management at this point in case something really bad happens in the stock market, because I just looked up a correlation chart between the stock market and the cattle market, and that correlation is getting more and more and more negative with one another. So that what we've talked about is starting to show up in the charts, that the equities markets is really starting to impact the funds and the traders' mindset about beef consumption especially.
I should ask hogs as well, as it's top of mind here before we run out of time today. That front month April contract has really kind of taken off out of terror the last couple of days here. Any update with what you're seeing there, Mike?
Yeah, I think this is short covering. I think it is weather related because of the northern plains. Minnesota and Iowa are really getting the brunt of these systems lately. But I would also say you've got a $6 plus premium in April hogs versus the cash index. So be very careful about being a long in this market, and don't overstay your welcome to get your marketings made in terms of cash marketings. I know that's kind of an old time thing to say, Jesse, because everything's done on a price grid or already contracted into the hog contracts already on a cash basis. But I think we need to stay current and stay very fresh in these markets. I would also say the back end has lost some money this week. I think that's due to the Chinese situation. I think some people have probably pulled off some of their longs in the summer because they don't see the excitement as maybe they thought we would see because of these tensions that are starting to brew.
I think that's a very wise thought there to consider. Mike, before we run out of time, we covered a lot. Any final thoughts you want to share with us today?
Just continue to think about, working in a basis with us, to pick up a free trial with us. I think you would find a good amount of information that could be very useful for your operation. So go to globalcomresearch.com and check that out and get a free trial.
Globalcomresearch.com is where you can find Mike Zuzolo. We appreciate the time as always. Thanks for joining us this week, sir. We'll talk to you next week.
I hope you get poolside soon there, Jesse.
I'm going to do my best. That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.